You probably use moving averages in your trades and they work, as you can see. Whether it's a 20 period moving average or a 200 period one, the market always respects these levels. But if we replace these moving averages with an arsenal of moving averages, we can achieve much better results. At least that's what a Japanese trader named Goichi Hosoda did in the 30s, developing over 30 years a technique called Ichimoku clouds. This technique is extremely powerful because it uses space data and future market projections to create more accurate and profitable moving averages. It's all based on a Japanese concept of balance and time, where each element and moving average of the Ichimoku indicator works together, whether it's the baseline, the conversion line, or the powerful clouds. Using this technique, a Japanese trader in Tokyo achieved 71% win rate. So in this video, we're gonna to explore exactly how Ichimoku clouds work, and mainly the most profitable strategies. First, I need you to understand what all these Ichimoku lines represent. Starting with the Chikou span, a moving average that projects a zone of price overvaluation based on the last 26 candles. This gives us indications of where we should sell or be careful about buying. Next, we have the Tenkan-sen, which shows the average price of the last 9 candles by calculating the highs and the lows of each one. This creates a zone that helps you execute scalping trades in these regions. Let's continue. The Kijun-sen, it's a 26 period moving average with some modifications from the brilliant Goichi Hosoda. And finally, we have the incredible clouds, which, based on the other moving averages I just showed you, project 26 candles forward to create the top of the cloud. The bottom of the cloud is almost like a 52 period average. The combination of these two forms the Ichimoku clouds, which have a high capacity to block prices from falling, or in some cases, prevent prices from rising. So after I explained the theory behind how this powerful indicator works, let's see. Take a look at this 5-minute chart. There was a downtrend, so the clouds were negative, indicating a continuation of the drop. After a sequence of bearish candles, the market made a pullback against the trend. At this moment, following the logic, we should expect a continuation of the drop between the Seikon span B or Seikon span A, and that's exactly what happened on this day. In fact, not only at that moment, but 2 hours earlier, the market also made a pullback, and the Ichimoku clouds did their job. The market tested the clouds 1, 2, 3, 4, 5, and 6 times. There were 6 pullbacks against the trend, and the clouds held strong. What I just showed you is a 5-minute chart, which is not the ideal time frame for the clouds, as charts above 1 hour work much better. As you can see in this example, in an uptrend, the Seikon span consistently acts as support. Therefore, trading with the clouds using them as support and resistance might be one of the simplest and most profitable strategies. But you need to pay attention to one detail. Since the clouds reflect the past and project into the future, it's crucial to consider the cloud's thickness. The greater the distance between the Seikon span A and the Seikon span B, the stronger the cloud's ability to hold the price. That's because the clouds also reflect past support and resistance regions. In this case, it's ideal to enter these regions when the cloud is thick and avoid regions with thin clouds or during reversals. The cloud zones work, especially in uptrends or downtrends, because during these moments, buyers are highly active in an uptrend. For example, when the price retraces, which is normal, it tends to move to a region that's conformable for buyers. During an uptrend, it's rare for prices to drop abruptly. This is because the buying pressure is much stronger. That's why the market tends to respect the clouds, as they indicate where most buyers are positioned. The Chico span, which essentially shows the average price, supports two main strategies. The first is movement indication. The farther the price moves from it, the greater the probability that the trend will continue. When the Chico span gets closer to the candles and the current price, there's a higher likelihood of reversal or consolidation. So one strategy to profit using this line is definitely to trade in its favor. For example, when the Chico span crosses an uptrend, the best move at that moment is to start considering selling, or at least stop buying. As for the Kijun-sen and Tenkan-sen, things are different. Being shorter averages, you can use them for trades almost all day long, whether in trades following the trend or, as in this example, entering against the trend when weak or promising candles form. But the most accurate traders and the best operators on the Nikkei index in Japan excel when the entire Ichimoku system works simultaneously. For instance, in an uptrend, we would wait for a market pullback. The longer the pullback takes, the closer the cloud and the lines get to each other. Then, with the price line pointing upward, this would be the perfect entry for a profitable trade. You can add the Ichimoku clouds and execute trades on TradingView. Simply go to the top of corner, click on indicators, search for Ichimoku and add them to your chart. Then you can customize some settings to your liking. Choose TradingView. I will leave a discount link in the description. It's the best platform for charting and adding indicators. The Ichimoku clouds go beyond a simple visual representation of support and resistance. They are a synthesis of market balance, functioning as a true barometer of strength and trend. While the top of the cloud formed by the Senkou span A reflects a projected short-term average, the bottom, made up of the Senkou span B, uses a long-term approach, creating a zone that seems to embrace the price. This interaction between short and long-term projections provides a unique reading of market dynamics. And that is the exactly reason why you need to stop using normal averages and start to use this incredible Japanese indicator.